Good afternoon, everybody. So today is Tuesday, October the 9th, and we are entering week 6 of AMT 2630, your agribusiness planning and management course. And so I'm going to take a few minutes here and just go over your deliverables here for this particular week. So you'll notice that this week we're looking at, we're continuing on with your external analysis to do a SWOT, and now looking at your startup costs and the basic underlining financial plan that you're going to be putting together for me. So if we go back to the Moodle site, if you scroll down to week number 6, you'll notice that I have a template, startup and cash flow template for your business plan. If you click on that template, you'll see that this should open up. And the way we're going to read this is that we have four different tabs. We have our startup cost tab, we have our first year financial operations, and the second and third year financial operations. For your startup costs, what we have are a variety of different items that will need to be purchased. So we have land that might need to be purchased, all your equipment, any startup inputs. We might have, say, a livestock purchased. And let's put that at $125,000. And over on the other side, we'll have the source of the financing. So in this case, what do we see? We see the following here. We see that we have the items to be purchased, and then we have the source of the financing. So generally banks will not give 100% financing, often they'll only give 70% financing. So a mortgage, if the land's going to be worth, land and buildings are going to be worth $1 million, the bank would lend, say, $700,000. For equipment worth $500,000, they might lend $350,000. For your startup loan, your inputs might be $100,000 for all your miscellaneous costs, and so they'll cover $70,000. Now, different government programs might actually pay for the full livestock amount. So we'll say out of the $125,000, you can find a government program that will help cover those full costs. So you'll see that here, the total amount to be purchased is $1.725 million, but our financing only comes up to $1.245 million. So I always say you might have a rich Uncle Bob or just owner's investments to help make up the difference. So in this case, if we have 1.725 and we can find financing, we can find financing of 1.725 and 1.245. Try that again. All right. Go back to what I did before. Means we need to come up with money here of $480,000. So in this case, what we can see here now is that we balance, that we see the full amount that we need to spend in order to get our farm up and running, and now we can see how it's being paid for. So through a mortgage, equipment loans, a startup loan, a livestock loan, and then say owner's investments or a rich relative to the tune of $480,000. This is a very useful worksheet because it tells us not only what we need to buy, but also where the money is coming from. Now, once we're done that, what we can start doing is planning out our year. And I've just got the years now going from January through to December, but it could run from, let's say, September through to the end of August, however you want to structure your year. And this is a cash flow spreadsheet. It is not designed to be a balance sheet. It's not designed to be an income statement. I've been using this in industry for a good number of years. What I've found is that if I ask my clients, if I'm a lender, if I ask my clients to prepare a balance sheet or income statement, if there's anything that's wrong technically from the balance sheet or income statement accounting side, it makes them look like they don't know what's going on. So what I always have clients do is I just have them tell me their story. When is your money coming in? So for example, livestock sales, if we're going to sell some livestock, let's say in April for $150,000, and then maybe again in the fall for another $50,000. It tells me how much money, or $500,000 I guess in this case, it tells me how much money is coming in and when. And let's just say I sell some of my crops here in November for $250,000. Again, you can just see how much money is coming in and when it's coming in. And then for salaries, let's say I was going to spend $5,000 a month on salaries. Drag that across. Rent, if I was renting some land or some other equipment, let's say $30,000 for land here. You can just start to see how this starts to build quite quickly. And I enjoy this because it'll tell me how much cash is coming in, how much cash is going out, and if this number were to ever drop below 0 when I set up my formulas, then that'll tell me that I've run out of money, that I've got more money going out in any particular time frame than I have coming in. So what I would do to set that up, down here, if I want to know what's going on at the end of the year, I'll take my beginning cash balance, which is going to be January, plus the cash that came in through the year, minus the cash that went out for the year. Means I'm actually short some money here in the first month, but you can see how by the end of the year I've picked that up. And so at the end of, or beginning of February, my bank balance is going to be the same as the end of January. So I just kind of pull that across. And again, I can just see where my cash position is going to be. So what I'm going to encourage you to do is start building your startup costs and start figuring out your costs for year 1 at this point in time. Year 2 and 3 is actually quite easy to do. Once you got year 1 done, 2 and 3 actually comes together fairly quickly. Now this will be something that you're continually updating over the next few weeks, but it does provide us a base where we can see where we are going to go financially. Once you've got your startup costs and your year 1 done, if you're having any issues with the spreadsheet, let me know. I can either have you email me a copy, or we can have a copy put up onto one of the drop boxes there, and then I can help you go through your spreadsheet to make sure everything works out. So for this particular week, what I'd like you guys to do is continue working on your external analysis, continue to build that, continue to do some readings, take a look at the readings and the videos that I have up on Moodle, and download and start filling out and start working on the cash flow and startup template. If there's any questions, feel free to email me or post a question to the discussion board, and I'll happily answer any questions that you guys might have. All right, happy studying, and I will talk to you guys soon.